Good morning, traders. This is Chris Buss with Traders Profit Compass with your midday market pulse for Wednesday, October 28th. Okay, guys, I hope you're keeping your wits about you. I hope you're trading level to level. I hope you're trading the charts and not your P&L. If you focus on the charts, your P&L will work out fine. Let's see what we got. SPY 4-hour, gap down. Came down, we lost this 332.50, which was a key level that we had talked about this morning. We've come down to fill this small gap down to, well, it reached down to 327.50, but it's now recovered. I think we're at a bounce point. Let's look at the 1 hour. You can see a hammer forming here. I think that's a good level to if you were short, a place to cover and look for a bounce up into potential resistance. If we put let me do that. Let me see if I can put the fibs on this real quick. I didn't plan to do that, but it might make sense. Yeah, so if we got a 38% fib, that would bring us up to 332. And if it gets back up to this gap, I would expect that to be resistance later today if it got that far, and that would be a place to either cover a long that you just took or to potentially reinitiate a short. Your other location would be 334, which would be the bottom of this channel coming down. Given the selling, I would expect a higher probability that it only getting back up to the gap. That would be my favored scenario. A bounce here, and then cover your long and a potential short with a stop just above. If we lose the low, I would be wrong, and then we're going to come down to 325 here at this level, and then even if it gets really ugly, down to the September lows at 322. And remember, that was our technical target at the bottom of the box. Amazing how that stuff works, guys. Back into the box, and here we are, right near the bottom just a day or two later. That's just the way it works. Let's look at the Qs. I just sent out a quick note that I got long just moments ago. It's 11:16 as I started the video, and I just did that within the last 10 minutes. But we gapped down, found support here at this lower gap at 274, where it took a look inside and then held that gap at 274, and looking for a bounce. If I were to extend this line, which I should have done, you had dual support there. You had gap support and you had channel support right here at this 273 level. And if you look on the 5-minute chart, you'll see quite a number of candles that reach down to the same point and could not go any lower. So I'm looking for a little bounce here. 60-minute chart, here's that level. Looking for a bounce back in. I'll put the fibs on that. I'm sorry I didn't do that. But just looking for a bounce, not anything more than that. And I have a stop at the low of the day. So if I'm wrong and this gap fills, then we'll be down at 271.50, and then below that, who knows what happens. IWM, made a reach to close this gap at 153, did not quite make it. That would be my my downside target after any bounce. Come back down here, fill that gap, and then that will be your 50% fib level. It's bouncing at the moment, as you can see. Any break below 153, and then it's down towards 150. But that may be it for the moment. Expecting you know, a bounce across the board. If it got back up in here towards 155, that would be a place to start looking for a short re-entry. I am not expecting some big rally into this afternoon. Facebook kind of did what we expected from the standpoint of came down to the trend line, which has held. So that worked good. I did not favor even taking this trade because of, you know, all these various different layers. I thought that was a harder one to take. But right now, in the afternoon, I would be looking for a little bounce. But if this came back and failed, then you're looking for a gap fill down to this 267.50 area. I'm going to do a quick check here of things. Not bouncing exactly the way I wanted it, but I have my stop set. Apple. Great little trade setup that we had lined out to a T this morning. We said 115 was our bull bear pivot. You got a little baby push above. You had time to enter. If you entered short at 115, that was very objective. And we got a quick move down to 113, which was our technical target. You can see it is broken below, but holding. So as long as this stays below 113, 110 is still a technical target for the downside, as long as it stays below 113. If you're short, you can stay short. I don't see a particular reason to cover here. I would cover on any move back above 113, and then you've got $2 in the bag, but still available downside if they want to pull the rug this afternoon. Tesla, there was hardly a trade to make here because it gapped down and just went down to 410, which you can see has held. Bouncing a little bit early, showing some relative strength. I would just be looking at 410. And if you bought 410, then you're in good shape. You can still look for 420, and you've got your stop just below. Microsoft actually gave a pretty nice chance here to get short on this reach up to 209.50, which was our resistance level. We had lined that out this morning, and then we hypothesized that we would get a fast move down to this support level, which we got. Nice $4 move if you got in near the top. Now we're at support. I would expect this to bounce a little bit. It's trying to hold, but if that fails, then reshort and look for 202 and potentially 197 down the road. That won't happen today, but this 204.75, 204.50 area is support, and you can see that it's holding there. Amazon was another one where we had lined out this morning that 32.50 was the key. Got a push above, got your chance to enter right here at 32.50, and we hypothesized a fast $50 move down to 3,200, which we got, and now it's wrestling with right now. As long as it's below 3,200, there's a chance for 3,150. If it breaks back above, I would be closing that for sure, and keep your $50 that you made on this trade. And guys, I know I'm making it sound a lot simpler than it is. Okay, get short here, go there, that's where it's going. It's not always that simple, I know that, but in the setups, and I think that's why it's so important to line out, what you're focusing on in the morning as, trades you want to target. And when you get that opportunity, when you know, hey, I'm getting short on a break of 3,250 because that's a key level and it's been a key level forever. When you saw the break above and then immediately lose that level, you just got to be quick. And if you're intraday trading, you have to know these levels, and you have to know, exactly the trigger you're going to pull with your objective stop just above. So these worked out well. Google, gap down. We had talked about, this, that was probably a much harder trade to take, but now it's down here at the gap, 1520. If it moves in below that, you're looking for, basically a $10 gap fill and potentially coming down to 1505. Netflix, this is the going back in lockdown mode. So you're seeing the lockdown stocks do relatively better. It popped out here, but you can see it ran into resistance right here at the downtrend line. If you get a pop above, you can look for 505, but if you drop back below 490, I would expect 480. Just a quick look at XLB. We had talked about 50 being the place you could have shorted yesterday against the 50. Got a gap down this morning. Now the key level is 61.25. I would expect that to hold initially, but if it doesn't, then you're looking at the 200 down at 59.25 or so. XLF, of course, this is the trade I did not take yesterday. It would have been a good winner, but who knew? So now we're down here. Target's going to be your September low at roughly 23.15, something like that. Kind of out in space here. No trade to make at this point in time. There's no line to shoot against. XLI was another one we said you could short against the 50. That turned out to be a good idea. Gap down at the September low for all intents and purposes. If it cannot hold that level, then you've got the 200 here at 73.50. If you were to do anything here, your stop has to be right at 76.25, I'd say. So, any break back above into this box kills any short trade that you may have put on this morning. I wanted to take a look at gold and silver and the miners. We saw this back in March, and I think we saw it in June as well. Gold is not acting as a risk-off hedge at all. All the correlations are going to one in these liquidity events. Down, I don't have this as a live chart, down 1.7% as it stands now. Now you're looking at this September low back here at around 174. We're going to get a good long entry at a certain point, but right now it's a no trade, and I'm glad we got out of those miners first part of the week. Took our loss and moved on. It wasn't acting right, and now I'm glad we did with the gap down in gold. Silver, same story. Down here in no man's land, looks like it's headed towards this 2050 support, and there we'll have a decision to make, see how it acts. But if it doesn't hold that level, then the 200 down here at 1975. Gold miners rough, down 6%. Lost this 37 level. Now it looks destined for the 200 here at 35.50, and we'll see what happens there. But if that does not hold, then we're coming down into the 32s for this June low here. And these are just these were not acting right. I bid on the head fake up here thinking we had a breakout, and it just oscillated for 10 days, didn't do anything, and then we got out on this break below, and that turned out to be, we should have closed it sooner, but Monday was certainly better than today with that big drop. So anyways, now we got to wait for an entry somewhere. And actually, I wouldn't do it. I was thinking about, you could have shorted it here at 37, but with the 200 there, it's not a high probability trade. So let's just let that one go. I looked at a number of the trade ideas that I had outlined this morning. You couldn't do it. Too much going on, and most of those gapped down off the open. So there was no trade to make there on Roper and DXCM and FIX, FIX. No trade to make there. And even Bitcoin is pulling back 6% today. So everybody's going into liquidation mode, raise cash, blah, blah, blah. Oh, I wanted to talk to you about one other potential trade that I've got on the books. Okay, volatility is spiking. It's over 40 the last time I looked, probably going higher. I am thinking volatility is going to collapse after the election. I've seen a lot of big trades, big money trades. Looking out into December, I saw a big trade where one trader bought the December 16th 21 VIX puts for chump change, 60 cents or something like that. But what was interesting is he paired that with selling December 16th $30 VIX calls deep in the money for $7.50. So that's an expression of the same idea that I just talked about for a VIX collapse. And we got to pick our spot. We got to be smart. We got to pick a strike, and we got to pick a time. But VIX is not going to hold 44, 48, wherever it goes to. We're going to have to pick a bottom in equities to pull the trigger on that when we feel a reversal, or right before the election if volatility remains really, really high. I think you're going to see a big vol collapse after the election and towards the new year. So that's a trade I'm thinking about. Let's wrap it up there. A lot of things going on. Like I said at the top of the program, keep your wits about you. Trade level to level. If you're not comfortable, just step aside and let it play out. Don't do anything you're not comfortable in doing. And you know what? If you are trading, trade small. With the volatility, you can make just as much money with a half-size position in these markets as you would a full-time position with the VIX down at 20. So keep that in mind. Go for singles and doubles. No need to try and hit a home run. Honor your stops at all times. If you get stopped out, paper cut, no big losses, and I think everything will turn out just fine. And I'll touch base in the afternoon if I see any developments. I hope you're trading well. And you know, if you're new to the channel, please hit the like button and subscribe. Would love to have you on board and have you join the team. This has been Chris Buss with Traders Profit Compass. Talk to you next time.